The final day of the autumn could be the turning point for Wall Street. The trading session today is jam-packed with a batch of macroeconomic data. The highlight of the week is a speech by Fed's chairman Jerome Powell. Now let's discuss recent events and forecast by InstaForex analysts. As expected, the benchmark stock indexes closed yesterday mixed. Investors digested the news from China, and today they are sitting on the sidelines of a speech by the Fed's leader. The Dow Jones closed almost flat with an uptick of 0.10%. The Nasdaq was not able to overcome pressure on the high-tech sector and it closed 0.59% down. The S&P 500 regained its footing and climbed 0.16% to close at 3,957 points. The three stock indexes traded quietly in the New York pre-market. They went up in a sync in the early American session. The intraday corridor for the S&P is seen between 3,980 and 4,080 points amid the fundamentals and bearing in mind a slew of macroeconomic data which could be market catalyst today. The culprit of pessimism in the late autumn in China, on the final days of November, investors cherish the hope that Beijing might relax COVID restrictions. China reported a lower number of new coronavirus cases and launched a massive vaccination campaign. Today, futures on Wall Street indexes went up, with the Nasdaq futures showing the strongest performance thanks to Tesla shares. The stock of the e-vehicles manufacturer jumped 1.4% in the pre-market because sales in November increased due to lower price tags on its Model 3 and Model Y cars. The focal point today is a speech of the Fed's chair. Investors will be looking for clues to whether the Fed is poised to moderate the pace of rate hikes. Besides, the market is interested in Powell's comments on the U.S. current economic conditions. Federal Reserve Bank of New York President John Williams said this week that interest rates would be lowered not until 2024. Jerome Powell is expected to expand on the long-term levels of interest rates. Recently, Fed policymakers brought up the issue of lifting the target inflation level by 2%. Earlier this week, investors found out that the European Union CPI slipped more than expected in November to 10% on year, from 10.6% in October. Jerome Powell is unlikely to contradict his colleagues and will cement market expectations for a softer monetary tightening. He could indicate the ultimate level at 5% or higher for the next year. All in all, inflation seems to have passed its peak. Meanwhile, the labor market remains tense. Investors attach importance to Jerome Powell's speech ahead of the government employment data, which is due on Friday. On Wednesday, he got an idea of the employment in the private sector for November based on the ADP report and the closely monitored JOLTS job openings. The U.S. private sector created 127,000 jobs in November, the smallest number since January 2021, and way lower than the consensus of 200,000 new jobs. The weakest hiring was recorded in the construction sector and other sectors vulnerable to higher interest rates. In contrast, the consumer-focused sectors, including healthcare and the hospitality sector, reported robust employment. The US dollar is extending its slide on Tuesday. Its index shot another 0.3% intraday to trade at 106.50 points. The index is expected to trade in the intraday corridor between 105.70 and 107.20. Apart from Powell's speech, the US dollar is weighed down by the fresh ADP employment report. Earlier, the healthy labor market was the cornerstone of aggressive monetary tightening. In consequence, sluggish hiring may assure the U.S. Fed to soften the pace of rate hikes. The U.S. GDP data for the third quarter proves the resilience of the U.S. economy. The U.S. economy expanded 2.9% sequentially in the third quarter, stronger than the first estimate of 2.6% and the forecast of 2.7%. Imports fell 7.3%, steeper than the first estimate for a 6.9% decline. Exports rose 15.3%, higher than the expected 14.4% growth. On the other hand, consumer spending increased slightly better than expected, 1.7% versus 1.4%. The Canadian dollar incurred losses on Tuesday. The USD CAD pair rose to 1.36, the level unseen since early November. On Wednesday, the rally in the oil prices is giving the loonie a helping hand. Having dropped 0.45%, intraday the currency pair is now trading at 1.3516. The intraday corridor is defined between 1.3440 and 1.3620. The Canadian economy grew 2.9% in the third quarter on a quarterly basis, surpassing the forecast for a modest 1.5% growth. Nevertheless, the fresh reading remains the weakest since the second quarter of 2021. As for monetary policy, the Bank of Canada caught investors off guard because it eased the pace of rate hikes as the economy revealed the signs of a sharp slowdown. Now the Canadian Central Bank is widely expected to raise the key interest rate by 25 basis points in December. Oil prices provided the loonie with support on Wednesday. Crude oil is developing a confident rally. The benchmark rates gained 2.6% and 3.5%, both climbed above $80 a barrel. The crypto market perked up today. Bitcoin jumped 2.3% intraday and approached $17,000. If global investors sustain the risk-on mood, the token is able to escape from the upper border of the trading range where it has got stuck since the crash of FTX. Altcoins are also gaining ground in parallel. Traders cheered the news on the crypto industry. The brokerage firm Genesis is striving to avoid bankruptcy. Earlier, Bloomberg reported that the company's creditors had contacted lawyers to restructure the business and await insolvency. Bitcoin is expected to close the month on an optimistic note. The intraday corridor is between $16,200 and $17,600. Despite the positive sentiment in the pre-market, don't forget that the crucial event will take place after the opening bell. Comments from Jerome Powell may both improve sentiment on Wall Street and dampen instantly the risk-on mood. Trade with the profits and watch InstaForex TV channel, and see you tomorrow.